Aotearoa, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news: the scale of Trump's strategic failure with Iran is becoming clearer. Iran holds the key cards, it seems, and there is little but bluster and renewing its military flailing he can do about it. Even Israel seems to be ignoring Trump's potency, which is another sign of regional chaos. Iranian media reported that Tehran had suspended communications with Washington following the attacks in Lebanon and will move to fully close the Strait of Hormuz and open new fronts in their war pushback. We're just going to have to live with the resulting chronic mess, and that probably means elevated inflation for much longer and all that brings with it, like supply chain disruptions and logistics twists. Stockpiling, itself an indication of economic inefficiency, is the current way the global economy is reacting, in turn an inflation enhancer. First today in the US, that stockpiling is showing up in their 2 May factory PMI reports. The S&P Global version recorded output growth rose to its strongest level since April 2022, as buyers scrambled to beat price rises and supply delays. Input costs rose at their fastest rate since mid-2022. Meanwhile, the ISM version reported very similar conditions, even if at a slightly lesser level. In Canada, their factory PMI version reported that growth was sustained in May as output, new orders and employment all rose, but like the US, this is all trying to beat cost pressures and supply chain challenges that are intensifying there. In Japan, their May factory PMI remained unusually strong, but firms there signalled further strong increases in production, with sales, input costs and selling prices rising at some of the steepest rates on record. Stock building efforts are still very much in evidence amid the ongoing and substantial supply chain disruptions. In South Korea, their factory upturn, already strong, gathered more pace amid stockpiling efforts. Output rises are their strongest in 5 years. Price pressures persist and remain near record highs. Meanwhile, jobs growth is now at its highest since March 2013 as the outlook improves. Meanwhile, Korean exports surged 53% from a year ago to a record $88 billion for the month. For perspective, New Zealand exports run at $6 billion per month. Australia's about $32 billion a month. Their biggest increases were to China, although there were outsized export gains to the US. Their explosive growth is largely around their IT sector. In Taiwan, their factory output expanded at the quickest pace since July 2021 in May. New orders continued to rise sharply. Firms report intense cost pressures here too, amid supply chain disruptions. Stockpiling efforts are driving a quicker upturn in purchasing activity, they say. In China, their non-official S&P Global factory PMI was good, but nothing like their smaller neighbours. Growth rates for new orders and output remain good, although export orders fell. Input price inflation eased for the first time in 6 months. They also have stockpiling effects as factories raised input stocks because supplier delivery times stretched out again. Indian industrial production stayed expanding in April and at a good rate, similar to what they've had since July 2025, and showing none of the slowdown analysts had been expecting to see in their data. EU inflation expectations as tracked by the broad ECB survey shows them unchanged at 4% in April. Analysts had expected them to rise to 4.3%, but that didn't eventuate. The EU factory PMI is still expanding, but at quite a modest rate, even if they have some of the same cost pressures everyone else is reporting. In Australia, and in something of a surprise, the Melbourne Institute monthly inflation gauge recorded a 0.3% fall in May from April, after consecutive rises in the 2 previous months. The fall was primarily influenced by lower transport-related prices, attributed largely to the fuel and excise tax rollback. For the year to May, this gauge reports inflation at 4.4%. The monthly cost of living also declined in May from April, particularly for self-funded retirees. And the updated Australian PMI shows little real expansion, with the steepest fall in new orders since last October being recorded for May. But prices are being pushed up all the same, with selling price inflation at a 45-month high as sharp rises in input costs keep on coming. And the US Treasury 10-year yield is now just on 4.47%, up 2 basis points from yesterday at this time. Wall Street has started its week ignoring the Middle East situation, with the S&P 500 up 0.4% and enough to claim another new record high. The Nasdaq is up 0.7%. Both markets are consumed by the big tech IPOs underway. And the price of gold will start today down $48 at $4,491 an ounce, but silver's up 50 cents at just under $75.50 an ounce. Oil prices are up $4 at just under $91.50 a barrel, while the international Brent price is at $94.50 a barrel and up $3.50. Oil had been starting to trade like Hormuz was open, but no more. And the Kiwi dollar is lower from yesterday at this time at 59.5 US cents, down 50 basis points. Against the Aussie, we're also down 50 basis points at 82.9 Australian cents. Against the euro, we're down 30 basis points at just under 51.1 euro cents. That all means our trade-weighted index starts today at just over 62.9, which is down 40 basis points from yesterday. And the Bitcoin price starts today at $71,684 and down 2.5% from yesterday. Volatility over the past 24 hours has been moderate at just under plus or minus 2.5% as well. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.